So you got your first credit card, but you're not quite sure how it works. Basically, whatever you charge to the card, the credit card company will give you cash back and rewards based on how much you spent. And all you have to do is pay back the amount you spent at the end of the month. That's pretty much it. Pretty simple, right? Seems like a pretty good deal to me. You spend money and you get cashback rewards for pretty much doing nothing. Well, there's a catch. And this simple concept has led to thousands of dollars of debt among the average person. So whatever you spend on the card in a given month, the credit card company is adding it up for you, and they'll send you a bill at the end of the month. But because it's a credit card, none of the money comes out of your bank account like it would for a debit card. So unless you're tracking every single expense, it's very easy to lose track of how much money you're spending. And once your bill comes at the end of the month, you realize you spend way more than you thought you did. And that's the first way credit card companies get you, is through impulse spending. Now that you have a giant credit card bill that you cannot pay, this is when they go in for the kill. When you apply for a credit card, the terms and conditions explicitly state that any missed payment can result in interest charges of up to 26%. The amount of cashback they give you for your spending is pretty decent, but it's nowhere near 26%. If you don't pay off your bill in full, even the slightest amount that remains at the end of the month is subject to those ridiculously high interest rates. And this is how credit card companies make a lot of their money, is through interest payments on spenders who cannot afford to pay their bill. For example, American Express had a net revenue of $43.6 billion in 2021, and the average American family today has roughly $6,000 worth of credit card debt. I know what you're thinking. What happens if you just don't pay off your bill? I mean, what's the worst that could happen, right? Well, the answer is pretty bad things. After enough time passes, the debt will likely be sent to collections, and if you still don't pay up, it could potentially lead to a lawsuit. So it's probably best just to stay out of debt. That all being said, if you're a financially responsible person and pay off your bill at the end of every month, credit cards can actually be a great thing for you. They can raise your credit score and get you some nice benefits, such as free travel and cash back. And you won't pay anything in interest, because 26% of $0 in missed payments is still zero. So it's pretty simple. Don't spend money on your credit card unless you have the cash to pay it at the end of the month, because if not, those interest charges will catch up with you really fast. But on the other hand, if you're just really bad with finances and handling your money, I recommend just avoiding credit cards altogether. The risk is not worth the reward when you spend more than you can afford. So just be responsible, don't overspend, and make sure to pay off your credit card at the end of each month, because if not, everything you're doing is pretty much pointless.
Thank you for watching, and please consider subscribing.